Welcome, everyone. So, today we are going to dive into a really fascinating story from the world of AI hardware, and it's all about a company called Astera Labs. Now, this is a company that's right at the center of the whole AI revolution. But its stock recently did something that left a lot of people just scratching their heads. Okay, so here it is, the central mystery that really caught everyone's attention. Astera announced what you can only call a blowout quarter. I mean, fantastic results. And what happened? The stock took a massive 30% hit. It seems completely backwards, right? So to figure out what on earth is going on, we first have to understand what Astera Labs actually does. To really solve this puzzle, we have to get into the company's role in this whole AI ecosystem, and it's a critical one. You see, they don't make those big, flashy AI chips that get all the headlines. No, their technology is something different, but it's just as crucial. I want you to imagine for a second an AI data center. It is packed, just jam-packed with thousands of super powerful GPUs, and they all need to be talking to each other, like instantly. Well, as you scale that up, you hit a huge wall, a massive data traffic jam. We call it the connectivity bottleneck. And without a way to fix this, the entire system just grinds to a halt. And this is exactly where Astera's genius picks and shovels business model comes into play. You know, during the AI gold rush, they're not digging for gold, they're providing the essential plumbing. We're talking high-speed hardware, things like retimers and smart switches that basically act as the superhighways for all that data. This is what allows all those incredibly expensive AI processors to actually work together at mind-boggling speeds. Okay, so let's look at the evidence. Let's dig into the financials, because this is where the stock drop gets really, really puzzling. When you look at Astera's financial health, it is about as perfect as you can possibly get. What you are looking at right here, well, it's a number that every CFO absolutely dreams of. Zero. That's right. Astera Labs has absolutely no corporate debt on its books, which gives it this incredible financial flexibility. And it gets better. Not only are they completely debt-free, they are sitting on a massive pile of cash. We're talking over $1 billion. Now, what does this do? It lets them pour money into research and development to make sure they stay ahead of the game, especially as they're pioneering brand new technologies like PCIe 6.0. So, this brings us to the earnings report that really started this whole thing. And look, they didn't just beat expectations, they absolutely obliterated them. Revenue came in over 8% higher than what everyone predicted, and earnings per share, that key number for profitability, was almost 35% higher. Just a truly incredible quarter. Now, to really put their performance into perspective, just look at this chart. Astera's annual earnings growth is just shy of 100%. 100. That doesn't just beat the semiconductor industry average, it completely dwarfs it. We are talking about hypergrowth territory here. Okay, so let's recap. We have a debt-free company, it's swimming in cash, and it just reported record-breaking growth. So why on earth did the stock fall off a cliff? Well, the answer lies in two key announcements that, frankly, spooked the market. So here's the crucial point. The market wasn't really reacting to how well they did in the past. It was reacting to worries about the immediate future. A change in the C-suite and then a forecast for slightly lower profitability, those were the triggers. But you know what? There's a lot more to that second point than meets the eye. You see that cautious guidance on margins? It is directly tied to a massive strategic partnership with Amazon Web Services. This is a deal that could be worth up to $6.5 billion. Billion! It guarantees huge future sales. So what's the trade-off? Well, to lock in this landmark deal, Astra gave Amazon some pretty favorable terms, and that just slightly lowers their profit margin on each unit in the short term. It's a classic case of the market getting hung up on a small, short-term cost and kind of overlooking a massive long-term win. So now that we've looked past the market's kind of knee-jerk reaction, what do the experts, the people who cover this company for a living, what do they expect for Astera's future? Well, the consensus is pretty clear. Analysts are projecting that Astera is going to continue to grow at just a blistering pace. They expect both revenue and earnings growth to significantly outpace the rest of the market over the next few years. In fact, even with that recent 30% drop, the average price target from 19 different analysts suggests the stock has a potential upside of over 60% from where it's at now. So they see this plunge as a buying opportunity, not as a red flag. So all of this really boils down to one final question for any potential investor, right? Is Astera Labs a pricey bet on the future of AI, or is this recent dip actually a golden opportunity? And this is that classic tug of war you always see. The bears, they're going to point to its very high valuation. I mean, a price to earnings ratio that's more than double the industry average. And they'll point to that real margin pressure from the Amazon deal. But the bulls, they're going to tell you, hey, you have to pay a premium for a company with a commanding lead in such an essential AI category, and that this whole sell-off has created the perfect moment to jump in. One analyst report really summed it up perfectly. They see the sell-off not as a sign of some deep trouble with the company's core business, but simply as a valuation reset. Think of it like a healthy correction for a stock that had maybe gotten a little bit ahead of itself, bringing it back down to a more reasonable, though, yeah, still premium price. So the whole Astera Labs paradox, it really seems to be a case of short-term fears just overshadowing a really stellar long-term picture. But as always, we have to finish by making something crystal clear. This whole discussion is just for informational purposes. It is not financial advice, and you should always conduct your own thorough research before making any kind of investment decision.